Hello and welcome to Business Lunch. I'm Nisha Poddar and with me as always is my co-anchor Pavitra Parekh. So Pavitra, it's the day after the budget and a lot of things are getting digested with the market, and weakness is persisting also because of the global cues coming in and some of the corporate action and events which are shaking the sentiment of the market. But let's take a look at Nifty 50 at this point. 80 points cut at this juncture at 17,537 levels. Remember, it is still about 100 points above the lowest point of the day for Nifty 50. When it comes to Bank Nifty, that's clearly taking a charge in terms of the dampening sentiment, over 0.5% down at the moment. And mid-caps are the ones which are toggling between the red and green zone in the last few minutes of trade, but still definitely better and outperforming the key indices as well as the Bank Nifty pocket. When it comes to advance decline ratio, it's still in favor of the advances and some of the consumer and tech names doing extremely well in trade, contrary to the otherwise market sentiment, and Adani stocks continue to slide lower.
Oh, absolutely. And that remains one of the key stories that we're tracking this morning. So let's kickstart with exactly that. Stocks of most Adani Group companies are trading with losses after Adani Enterprises board in a meeting last night decided to call off the 20,000 crore rupee FPO on the back of market volatility. Group Chairman Gautam Adani in a statement said that the move was taken in order to safeguard investor interest and it would actually have no impact on the business. We're also picking up from sources that the Reserve Bank of India has sought information from banks regarding their exposure to the Adani Group stocks. So Shireen is joining us to tell us more about this. Hi, Shireen.
Hi. Well, yes, what we are given to understand is that the regulator has asked banks for information about the exposure to the Adani Group. Now, remember, this is not as if the Reserve Bank is taking some action. This is what we're given to understand as part of the standard operating protocol, given the fact that there have been significant developments that have taken place with respect to the Adani Group over the last few days. Now, as part of the standard protocol, the RBI is asking regulated entities, i.e. banks, if there are any fresh developments that the Reserve Bank needs to be aware of that may not have been factored in as far as the central database is concerned, which is CRILIC. Now, CRILIC does get updated weekly as well as monthly. Different data sets are updated weekly or monthly. And because there has been so much volatility in the Adani Group stocks and pledged shares, etc., just as far as abundant caution is concerned, the Reserve Bank has asked banks for any updated information that will clarify on any doubts that may arise. What we are also seeing, which is clear, statements coming in from various banks that do have exposure to the Adani Group. This morning, we heard from IDFC Bank saying that there is no concern that the bank has. We heard similarly from State Bank of India. So individual banks also coming out and issuing statements on their exposure to the Adani Group as well as where things currently stand. So this is the RBI seeking updated information from banks as part of the standard operating protocol, given the sharp volatility that we have seen in the last few days.
All right, Shireen, thanks so much for getting us all those important details on this very big developing story that we are tracking here. And keeping it with that, well, brokerage house Bernstein has also conducted an analysis of the share pledge situation of Adani Group companies. And Nimesh, our colleague, is right here standing by the big wall with details on what Bernstein has to say and what does their analysis suggest. Nimesh.
Hi, Nisha. So, the big talking point which was announced last night was that, the Adani Enterprise FPO has finally been withdrawn, and they're going to return the money back to the investors. Suppose that Bernstein has done a analysis on what it means for the Adani's bonds as well as for the promoters' pledged shares. Now, they've put out a scenario analysis. I'll just run through that. It basically, they've looked at three, different time periods. One is March 2020, which was the COVID time. Then December 2022, which the official disclosure which the promoter entity has made across all the groups. And now after the big fall in the stock prices, what it means in terms of implied share pledge, which can go up for the group. So let me start with Adani Green first. If you look at Adani Green, the pledge, the promoter pledge was 13% way back in March 2020. It fell all the way to 4% in December 2022. And after the share price fall, now it is implied that this can go up to 8% as far as Adani Green is concerned. Similarly, if you look at Adani Power, they don't have a data for March 2020, but as of December 2022, the pledge was 25%, and after the share price fall, it is implied that this will go up to 39%. The most important part is Adani Enterprise. If you look at Adani Enterprise, from 54% of pledge way back in March 2020, it has fallen down to just 7% in December 2022. And after the big fall in the stock price, it is implied that that would go up to 11% as of yesterday's closing price. Similarly is the case with Adani Transmission as well. I spoke about Adani Enterprise. Even if you look at Adani Ports, even there the promoter pledge has sharply fallen from 58% in March 2020 to all the way down to 17% in December 2022. And after the big fall in the share price, it is implied that this has gone up to 30% as of yesterday's closing price. So while the FPO has been withdrawn, that's now official. The key to watch going forward would be what happens to the Adani bond prices globally, and the fact that what happens to the pledge shares of all the group stocks. Remember, there is a very clear clarification from the promoters that as far as Ambuja and ACC is concerned, which is also not part of Bernstein's report, that those two stocks have not been classified or there is no pledge shares on those two companies. So looking at the big fall in the Adani Group stocks, this is what Bernstein said, that there is a risk of the pledge shares going up because of the fact that the stock prices have sharply fallen in the last few days.
Oh, absolutely. Nimesh, thanks a lot for getting us a complete snapshot on what the promoter pledge looks like in all of these different listed entities, and on the fact that, it's not there in Ambuja. That is why the stock has sort of jumped like this as well, and that is holding up still around 3% in the green. In fact, sticking with this story, we also spoke with Samir Arora of Helios Capital to really understand how he views this entire situation. So let's listen in to a few of those comments.
Management was poorly advised in trying to, in a sense, ram in the FPO at the original price. After last Sunday, my expectation was that they would cut the price by some whatever, 7, 8, 10%. And that would have allowed people who anyway believe in that Adani Group or the Indian funds or whoever to have applied. But when you have a clear difference of 10, 15% between the traded price and the FPO price, obviously it could not be rammed through. So I think today it's not such a bad deal to have cancelled it from their point of view.
All right, Samir Arora there, and a big development, Adani really calling off their large FPO. With that, it's time to slip into a short breather on the show, but stay tuned to Business Lunch, as after the break, we tell you how you could be impacted by the budgetary proposal of taxing income over 5 lakh rupees from the insurance policies. Don't miss that.
Hey guys, welcome back. You're still tuned into Business Lunch on CNBC-TV18, and more from the budget that we're tracking. It has continued with the government's agenda of really plugging the tax arbitrage options used by the ultra-rich. So what it has proposed is taxing payouts received from life insurance policies issued after 2023 April. Now, if the total life insurance premium of all policies combined paid in 1 year exceeds the 5 lakh rupee mark, then that is when you do have to pay this amount. So Yash is standing by with a full explainer on this. Yash, take us through the implications of this move which has been proposed, and what do some of the larger players have to say about this?
Well, Pavitra, there's not just one but two negatives which have come from the budget for the life insurance industry. First one is taxation on the income derived from savings life insurance policies, and the second one is the government's attempt to sweeten the new tax regime, income tax regime. I'll first speak about the taxation on savings life insurance policies. What the government has said is that if an individual buys an insurance policy and the annual premium for that individual exceeds 5 lakhs in a year, then in that case, whenever that policy matures and the income is derived out of that particular policy, that will be counted in your income, and income tax will be charged on that particular aspect. If an individual has 2 to 3 policies or one policy, in whatever case, if the annual premium exceeds 5 lakh, then of course there would be income tax on the income derived from this policy. Importantly, how does this function is very interesting. If an individual has more than one policy and with the policy that he exceeds the threshold of 5 lakh, then that particular policy will be computed for income tax and not the other policy. I'll give you an example to explain this very fact. If an individual buys 2 policies, one having a premium of 4 lakhs and the other one having a premium of 2 lakhs, he's exceeded the 5 lakh threshold, But in this situation, the 2 lakh policy will be computed for income tax and not the first 4 lakh policy. Assuming an individual has 3 policies, one 2 lakh, second one 2 lakh and the third one 1 lakh, then in that case he's still under the limit of 5 lakh and hence there won't be any tax and all 3 policies will be tax exempt. Now, industry's feedback on this particular move is that it will stop misuse of savings life insurance policies by the rich as tax-free investment. Also, the Q4 and the month of March will be very strong. Since this particular move becomes effective from 1st April, there will be a lot of demand for these high-ticket savings life insurance policies, so that could reflect in the numbers. Second negative, the sweetening of the new tax regime. Now, new tax regime does not have any exemptions in terms of ATC for insurance policies. If people start shifting to the new tax regime, the attractiveness of life insurance policies for tax exemption will also reduce, and that will also negatively reflect in the numbers.
Thanks for that, Yash. And directionally, it looks like a messaging from the government that, insurance shouldn't be considered a tax saving or an investment proposition. And that's the message that equity investors, some of them, are reading from this. Let's see where it goes from here on. But one of the very big developments from the budget was also the green push given by the Finance Minister, Nirmala Sitharaman. So after the budgetary push for the green energy and the power sector, my colleague Abhimanyu got in touch with the Power Minister, R.K. Singh, to understand how the policies announced in the budget would benefit the power sector on the whole. Take a listen.
In my sector, one, of course, is the emphasis on green growth. Now, on green growth, India is already a leader. We have emerged as the most attractive destination for investment in renewables. The rate of growth of our renewable energy capacity is one of the fastest in the world. What we pledged to do in COP21 Paris, we achieved 9 years in advance. We had the only major economy whose energy transition is concerned with the sub-2 degree rise in global temperature. Now, what this budget does is that it will give an impetus to that growth. The future is green. And that's what this budget is investing in. So number one, we have a huge project in Ladakh, which has the highest insulation, one of the highest insulations in the world. So we are going to set up a capacity of almost 10 gigawatts there of renewable energy capacity. For evacuation, we are building a line which has been approved in this budget. Now, round the clock, renewable energy needs storage. Now the budget provides for storage. So cutting edge areas the budget is addressing, yes.
Green hydrogen has emerged as another area of focus, not just as part of renewable energy, but also as part of import substitution, since India imports a large chunk of its energy demands. Yes. What is the government's roadmap towards implementation of the green hydrogen project?
We are well ahead. You see, we launched the mission. And that mission is 19,700 crores. It was announced in the budget. And the provision has been made for that, for starting that project. Now, we already have industries and, sort of taking action to set up manufacturing capacities of 6 million tons of green hydrogen already. Many of my companies have already gone and tied up export orders in Japan, in Germany, etc. So we have already started emerging as a leader in green hydrogen. Now, what green hydrogen does is, you see, when you want to go green, one, of course, is that you green the electricity, which we are doing by adding solar, wind, hydro, etc. And for round-the-clock energy, you need storage. So that we are adding, both battery storage as well as pumped hydro. But there are other sectors, apart from electricity, which use fossil fuels as feedstock, etc. Now, for replacing that, green hydrogen is necessary. Similarly, so for example, steel. Now, you use coking coal to make steel. Now, that's full of carbon, right? So you replace that with green hydrogen as the reducing agent. Now, what happens is that you get green steel. So that's where the world is moving. And we aim to lead the charge in that direction. We will be a leader.
All right, that is the Power Minister, Mr. R.K. Singh, talking about the big push in the budget towards green power and energy. But with that, we are going to get into a short break now. On the other side, we're going to bring you excerpts of our conversation with the Railway Minister, Ashwini Vaishnav, as he tells us how the budget will really impact the railway sector.
back. You're watching Business Lunch. Now, Reliance Retail becomes the first retailer in the country to accept digital currency or rupee for sales. And my colleague Shilpa Rani Peta spoke to the company's managing director, KV Subramaniam. Let's listen in.
E-rupee is another mode of payment for us. While we have credit cards, debit cards, cash, e-rupee will be another mode of payment. It's replacing the physical cash. So we are starting off in Mumbai with our Fresh Pick store in Geo World Drive. And as we go forward, in the next couple of months, it will be available across all the stores of Mumbai. And then we'll take it across the rest of the country and take it across all the 7,000 towns and cities and 17,000 stores of ours.
What's a rough timeline? By when do you expect it to be rolled out all across the country?
That depends how RBI is going to have it, so all this thing. But Mumbai, yes, we are ready for it.
Right.
And we are ready with all our technology and backend. As and when the banks and everybody else are ready, we'll actually go ahead and roll it out.
So UPI is currently so widely accepted already, right? Do you see the e-rupee also receiving similar acceptance? And since it's still a pilot, what are the kind of challenges that you would anticipate?
It's not a question of challenge. It's basically you're replacing physical cash with an electronic cash. So it's got all the properties of cash, but it's in digital form. So it's not that it's going to replace UPI or anything of that sort. Today, UPI is linked to a bank account and you have to make a payment. This is actually your own wallet.
Correct.
It's as good as carrying a physical wallet in your mobile phone.
Correct.
So you'll have an anonymity, privacy for all transactions that happen. So that's what I was saying. What will be the regulatory processes which will follow is also very important. For example, today when you have a 50,000 rupee transaction, you are supposed to collect a PAN card.
Correct.
If it's cash. If it's credit card or anything, it's a digital payment. We'll have to see how these are going to come as far as the e-rupee transactions are concerned. So we'll have to wait and see how the entire landscape evolves.
So you'll look at each of these challenges basis the transactions that keep happening
not
and
a
eventually.
challenge.
No, I mean the
challenge.
regulatory, whatever the.
It is not a challenge. It's basically a process which will require small tweaking at the
Tweaking,
stores.
correct.
That's all.
Of course.
Otherwise, there's no challenge as far as the technology is concerned.
Correct, correct.
So it will automatically happen. It's just like any other payment. You get a charge slip when it's the moment you make a payment. So everything is recorded. Only thing is how the privacy part of it is going to be looked at by the various government pieces is what we'll have to look at.
Right. And finally, talk to us about the partners that you have on board for technology, the banking partners, and how you're going to be working around the ecosystem.
As I said, Innovity has been partnering with us since 2006, the moment when we launched retail. So most of our payment systems have been integrated through their technology.
Correct.
And we have we already have a complete linkages to all the other banks.
Correct.
So this is an addition on top of this, one more layer on top of that. So that way that's why we could do it in 2.5 weeks.
All right, that is the word from the Reliance Retail Management, the first retailer to accept the digital rupee. But with that, let's move back and talk about the budget. Remember, there was an allocation of 2.4 lakh crores for the railways. This is actually the highest ever allocation that we've seen. So speaking exclusively to CNBC-TV18, Railway Minister Ashwini Vaishnav said that the railways is breaking even and that the next 2 years will be a turning point. He also promised that the first hydrogen train could be launched by December of this year itself. So let's listen in to some of those comments.
So with increased market share and adding close to about 300 million tons in the last 8 years as additional traffic, additional cargo, this has helped railway break even, and we are today able to meet all our expenses from the revenue which is earned out of railway. So for capex, yes, we are dependent upon the government budget. For OPEX, practically we are able to meet the entire expenditure. So that is where we stand. The coming 2 years will be really turning points for railway and this year by December, we should be able to roll out the first hydrogen train, and then we will manufacture using that technology for all the heritage circuits.
All right, so that's the plan for the railways after the budgetary allocation. With that, it's a wrap on Business Lunch. But don't go anywhere. Midcap Radar comes up right next to take forward all the market action and news of the day. Stay tuned.